Welcome back to another stock video. In this video, I'm going to go over my top 4 favorite Vanguard ETFs. And these are ones that I personally use for my own long-term investments. If you're interested in learning about options trading, be sure to check out some of my other videos. In those videos, I talk about how I use options to generate semi-passive income every week. Now, jumping into the first Vanguard ETF that I really like, it's called VGT. It's an information technology ETF, and it's the one I have pulled up right here. So VGT invests in a lot of tech companies. So some of its biggest holdings include Apple, Microsoft, Visa, and PayPal. And it's a good way to get exposure to tech stocks without having to pick individual ones. So let me go ahead and zoom out to a longer term, the maximum time frame I can. And as you can see here, it's been on a pretty steady increase since its inception, and it definitely looks like something that would be good for a long-term investment. Some of the key things with VGT is that it has a really low expense ratio of 0.1%, which means for every $1,000 you invest, you have to pay $1 in fees. And those fees are for the company that actually manages the stocks that are picked and used within that ETF. Another good thing about VGT is that since its inception back in, I believe, 2004, it's returned an on average per year 13.5%, which is really good. Now, jumping into the next Vanguard ETF that I like, it is VCR. So VCR is a consumer discretionary ETF. Basically, it invests in companies that produce goods that consumers purchase on a discretionary basis, or if they want it, but not necessarily something that they need. So some of the companies that are in the top 10 holdings for this ETF include Amazon, Tesla, Home Depot, and Nike. And similar to the previous ETF, VCR also has a 0.1% expense ratio. So again, for every $1,000 you invest, you have to pay $1 in fees, which is really good compared to some of the other ETFs out there. And since its inception, again, since 2004, on average, it returns about 12.47% a year. The third ETF that I really like is called VTI. So VTI basically tracks the entire US stock market and is really well diversified because it tracks so many different stocks. And the expense ratio on this one is actually only 0.03%. So for every $1,000 you invest in VTI, you have to pay 30 cents per year. Now, because this is such a diversified ETF, a lot of the movements are a lot smaller, both to the downside and upside compared to VCR and VGT. So this one has an average annual return of 8.8% since its inception in 2001. Now, 8.8 might sound lower than the other two ETFs that we just talked about, but when you think about it in terms of compounding, if you invested $1,000 every year at an 8.8% return, you would end up with $142,000 at the end of 30 years. So that's still a really, really good investment, especially when you think long term. If you just invest $1,000 every year and still get an average rate of return of 8.8, that's really great in the long run. The fourth and final ETF from Vanguard that I really like is VOOG. So VOOG invests in growth companies within the S&P 500, and so it invests in about 240 stocks. And one of the things you're noticing with these ETFs is that they're pretty well diversified across many stocks, so you don't have to worry about picking individual ones. The expense ratio for this one, similar to the first two, is also 0.1%, so $1 for every $1,000 that you have invested. And it has an average rate of return of 18.16%, which is higher than the other three, but definitely there is risk because of that higher return. The swings in terms of how much price moves could be bigger here. So if you want more detail on any of this, definitely make sure to check out the link in my description where you can go directly to the Vanguard website and see a comparison of each of these ETFs, and with tons more information in terms of what the expense ratio is, how their performance has looked not only on average since their start, but also in the last year or in the last 3, 5, 10 years. There's plenty of information here for you to look into. It also breaks down some of the bigger companies that each of these ETFs holds and how diversified they are. So definitely go ahead and check out that link for more detail. So these are some of the ones that I use personally for my long-term investments. I try to average in and put a little bit of money into each of these every month, and I plan on just letting them grow for the next 20 to 30 years. If you found this video useful, don't forget to like and subscribe, and feel free to check out some of my other videos, and I'll be coming out with even more videos on long-term investing and how to generate passive income.